Thank you very much. Good afternoon, ladies and gentlemen, and thanks for joining us. My name is Jeremy Wyeth, President and CEO of Treasury Metals. Our presentation today, developing the Goliath Gold Complex in northwestern Ontario. As usual, point you to our forward-looking statements. Treasury Metals has 100% ownership of the Goliath Gold Complex, and that comprises of Goliath, Goldland, and Miller. I think quite a few of you will remember in 2020 we purchased the neighboring asset Goldland from First Mining, and we're on our way to look to develop that. We have a federal EA in hand already for Goliath, and we're in the process of adding Goldland to that. The infrastructure involved in this project is some of the best I've seen in the world. The last project I built was in northern Ontario at the end of a 400-kilometer winter road. This project has road, rail, power and gas right to the site. I joined 3 years ago, and the mandate from the board was to put together a team that could build this project, and I'll take you through what we've done and how we've progressed that. We put out a PEA in 2021 and a PFS earlier this year. I'll take you through in a separate slide the strong economics that we got out of that PFS this year. And the other thing, in 2021, we committed to growing the resource, growing the reserve, and maintaining the economics as we moved from PEA to PFS, and we managed to do that. Our mineral resource now is 2.1 million ounces measured and indicated, and 0.8 million inferred. We're in a strong financial position. At the end of June, we had $11 million in the bank. On the right-hand side, you can see where the Goliath Gold Complex fits. It's in an area that is no stranger to gold mining, about 60 million ounces of production historically in the area, and another 40 million ounces in 43-101 resources. If we look at our capital markets snapshot, we took our share price at the beginning of September, 25 cents a share, about 150 million shares outstanding, market cap 37 million, fully diluted, just under 170 million shares. That was the cash position. On the ownership side, First Mining owns 13%. After the acquisition, they were at 40%, but they did distribute half of their shares to their shareholders. And with the financings we've been through, they've diluted to 13%. Management and board, and we've seen some change in the management and the board since the acquisition. A lot of the board members are very new, so those shares are all purchased recently in the markets. 36% institutional, and then about 50% retail and high net worth, and that is made up, with the acquisition, we picked up about half of that being US shareholders and the other half European, mainly Germany, France, and Switzerland. If we look on this side, shows the property, Trans-Canada Highway, rail lines, provincial road running up the length of the property. The green areas are provincial parks. All the infrastructure will be built around Goliath, Goldland, and Miller are further up. And the previous speaker spoke, or one of the previous ones spoke about the hub and spoke model. And the idea here is to move material from Goldland and Miller to the infrastructure at Goliath. Trans-Canada Highway, all the different access points to the property. Dryden, being our closest town, 15 minutes away, has a large pulp and paper mill, used to employ 1,500 people. It's down to about 400 or 500. So there's a lot of people living in Dryden that are working. Some of the previous speakers spoke about Red Lake, spoke about Rainy River. A lot of the people are moving and working at those sites, and we have the opportunity to bring those people back and work from home. I mentioned the environmental assessment. And the co-development opportunity here is Goldland in the 80s was an operating mine. So it was never fully closed. So it's actually a brownfields opportunity for us, and we can leverage some of that as we move through. A little bit about the team. That's the management team that's been put in place. There's about 150 years of build and operate experience in that, and I think that's quite rare in a junior at our stage to have that level of skill. Both Oren and myself have built and operated mines. This will be the 6th mine that Rachel will take from half a dozen people up to a full complement. She worked with me at Victor, the Victor Diamond Mine. She then went to Detour. She then went to Kirkland Gold, Battle North, and now she's back with us. Carl Emsley joined us, 15 years of permitting and environmental compliance. Steph LaBelle has done more than 40 agreements. She actually worked for the Waban Tribal Council, so she has experience both from the community side to resource companies and now from resource companies back into the communities. Adam has been with us for 10 years. He's our longest serving employee. On the exploration side, knows the resources absolutely backwards. And Floyd Varley joined us to help us with the project side of things, and as you can see, also 40 years in the industry building and operating. The pre-feasibility study, and as I said, we managed to grow resource, grow reserve, and maintain the economics. We're sitting at this stage 336 million NPV, 25.4% IRR, and that is at $1,750 gold. So at today's gold market, we are actually sitting at close to $500 million value on the project. CapEx to build it, 335 million. I think we've seen in Ontario specifically quite a few of the larger projects that have gone through some very difficult times. Most of those have been significantly bigger than this. This is more a bite-size construction job, 2.8 year payback at 1,750 gold. At today's values, that comes down. In the PEA, we had just short of 100,000 ounces per year for the first 9 years. We are now up to 110. 13-year mine life. Total ounces recovered, 1.2 million ounces. Cash costs just below 900, and all in just over 1,000. So good solid economics for us. And probably the best part of this is it's a very basic gravity CIL gold operation. So there's no new technology or anything in it that we need to be concerned about. On this slide, we can see 6,500 tons per day, 1.2 million ounces in total. Peak production in year 2, just under 130,000 ounces. A lot of the work that was done in the PFS was to bring grade forward from the PEA. So we worked hard to get that forward. Obviously helps with financing the project and also with payback periods. At the bottom here, you can see the leverage to gold price at 1,950 gold, just on a $500 million NPV and a 33% IRR. So as long as the gold price stays and keeps moving upward, we're in a very good position there. People are sometimes inclined to look at projects just as the average for the life of mine, and if you do this one, 90,000 ounces per year at a grade of 1.3. But the work we did in the pre-fees, if you look at the first 5 years, it's 116,000 ounces per year at a grade of 1.7. The next 4 years is a bit lower than that, but on average for the first 9 years, 110,000 at a grade of 1.6. We start the underground mine in year 1, and it reaches maturity around about year 3, 4. So even in the first 5 years, even spending $30 million a year on sustaining capital and putting in the underground mine, we still generate $106 million of post-tax free cash flow per year. Over the first 9 years, that's just under $100 just 88 million at $1,750 gold. Again, at today's prices, that goes up to 100 or more. The mineral resource, just a summary of that, I mentioned the 2.1 million ounces at about a gram and about 800,000 ounces of inferred material at about 0.75. And then again, how we did manage to increase the M&I ounces and the overall inferred in the move from PEA to PFS. If we go back 3 years, the pipeline that we had, the exploration pipeline, had a little bit under mineral resource. Had a little bit under mineral resource and very little else in the pipeline. One thing that both companies really did well was maintain the records and the data from the exploration. This thing has a mind of its own. So what we were able to do is put all the data together, consolidate it, and then get ourselves into a position where we could now start building this pipeline for growth. Our strike length is 65 kilometers, and we've drilled about 5 of those kilometers. So we have about 60 kilometers that are un- or underexplored. The idea here is we've raised some money recently. We raised $1.4 million from charity flow-through. The idea with that is to put it into some near-term targets on the Goliath site, Fold Nose, Far East. We are trying to get into the Interlakes area, which is a highly folded area between Goldland and Goliath. The complexity of the folding there is such that we've actually had Mira Geosciences helping us with modeling and targeting. We've had a very wet summer this year, and as such haven't been able to get in, but as soon as the winter comes in, we can get in and do some drilling in those areas. None of the drilling what we're doing at the moment will actually end up in the feasibility study. It's all exploration drilling. The one change we will see, though, is that we have sent 35,000 pulps to the lab so that we can bring silver into Goldland. There was always silver in Goliath, but it was never assayed for in Goldland. And if we have the same proportion of gold to silver that we have at Goliath, that would probably amount to about 1 million ounces of silver that is upside for us in the new resource as we go into feasibility. The process we're in at the moment is to continue with permitting and IBAs. And we've just finished off some value engineering that was the result of the reviews we did on the pre-feasibility. All of the work so far has come back confirmatory. In other words, the assumptions we made in the pre-feas are all confirmed. There's no major upsides, but there's also no downsides in those. There is still some work coming back on the water modeling that we're busy with. So we'll progress the feasibility engineering at a rate to support the permitting and the IBAs. We don't want to get ahead of it because then we will end up at the end of it with a feasibility completed before we have the permits and are able to finance this. And then we'd be in a situation that quite a few people have seen recently where we would need to revise the feasibility numbers because they were outdated. If we look at the last slide, if we look at our peer group at 2.1 million ounces, we chose a peer group of 10, 12, 14 different companies. We towards the right-hand side, but if we look at the market cap, we're right at the very end. And if I think back to last year, it was a similar story, but last year we were sitting with gold that had just gone through 1,700, was on its way to 1,600. All the companies, mainly developers, were seeing quite a bit of pain in their share prices. A year later, we have gold that is above 1,900, but there seems to be a big disconnect in how developers are being treated in that. So if we just summarize all of that, project with a federal EA in hand, Tier 1 jurisdiction, Northwestern Ontario, Gold Belt, easy access to infrastructure that I haven't seen before. good solid PFS with good leverage to gold price. So if everyone is correct and the gold price is going up, good news for us. I've spoken about the exploration targeting that we're doing. We feel that the upside in that is huge. For us, it's a delicate balance between taking too much dilution now to do the drilling and diluting shareholders rather than doing that out of cash flow. Experienced team, and we funded with the money we have through well into next year to enable us to move the project forward. Thank you very much.
Perfect timing, thank you. Moving along, our next